Welcome to our class on how to trade stock options. You may have heard friends in your Discord or YouTubers boast about their success with options trading. You may have wondered if you too could achieve financial success with options trading. Well, let me tell you, you can. And that's exactly what we're here to teach you today. At the end of this class, you'll have the knowledge and skills you need to start trading options like a pro. We'll be covering everything from the basics of stock options and how they differ from stocks, to advanced strategies for maximizing your profits and minimizing your risks. Alright, now that we've set the stage, it's time to get started. I want you to grab a pen and paper and get ready to take some notes, because you're about to learn everything you need to know about options trading. But before we dive into the first lesson, let me give you a quick tip. To make the most of this class, I suggest you keep an open mind and be willing to learn new things. It's also important that you stay engaged and focused, so if you need to, feel free to pause the video and take a break. Understanding options contracts. You will gain an understanding of the basic concepts of stock options and how they differ from stocks. You will learn about the different types of options, including call and put options, and the basic terminology such as strike price and expiration date. So, get ready to dive into the exciting world of options trading. Meet Paul. Paul is a hardworking individual who has always strived to improve his life. He has been saving money for years and is now ready to take the next step in his journey to homeownership. He starts by researching different options and comes across the idea of a rent-to-own agreement. The concept of renting a property with the option to purchase it at a later date appeals to him, as it allows him to live in the property while also building equity in the home. Paul decides to visit his local bank to inquire about the possibility of a rent-to-own agreement. The bank's mortgage specialist explains the process to him and tells him that it's a good option for someone in his situation. Paul is excited to take the next step, and he starts looking for properties that are available for rent-to-own. After a few weeks of searching, Paul finds the perfect condo. It's located in a desirable area, and the price is within his budget. He contacts the owner, and they agree to meet to discuss the terms of the rent-to-own agreement. Paul, being a hardworking individual, sees this as an opportunity to secure a property at a set price, and if the housing market goes up, he can sell the property and make a handsome profit. Paul also understands that if the housing market were to go down, then he could exit the contract without paying the full price for the property. Paul and the owner sit down to sign the contract, which outlines the purchase price of the property, the length of the agreement, and the terms of the rental. Paul is excited to have found his dream home, and he starts making arrangements to move in. Comparing rental and stock options. Paul's story of buying a home through a rent-to-own agreement is similar to the process of trading stock options. Both parties have rights and obligations outlined in the contract. Paul, like the tenant buyer, is responsible for paying a deposit and has the option to purchase the property at a set price in the future. He may choose to exit the contract if he chooses not to purchase the property and may lose money if he exits the contract before the purchase date. The bank's agreements in Paul's rent-to-own contract. The bank agrees to accept Paul's offer to purchase the property at a set price in the future, allowing him the opportunity to take advantage of potential market appreciation. The bank will require Paul to make a deposit on the property, as a form of commitment and security for the agreement. The bank understands that at any time, due to market evaluations in the future, Paul may decide to exercise his option to purchase the property if the housing market goes up or stays steady. Or, that Paul may choose not to purchase the property if the housing market were to go down. In summary, Paul's hardworking attitude and his decision to enter into a rent-to-own agreement is similar to an individual who is trading stock options. Both parties have rights and obligations outlined in the contract. But you, like Paul, have the option to purchase or exit the contract based on market evaluations. When you trade stock options, you enter into a contract to buy or sell shares of a stock at a set price on or before a specific date in the future. And, to enter this contract, you will have to pay a deposit or what is known as a premium in stock options. In both cases, you, the buyer, takes on a certain percentage of risk due to market fluctuations. If the housing market goes down and Paul's property decreases in value, he may choose to exit the contract and not purchase the property, but he may also have lost some of the money he has already paid towards the purchase price of the property. In conclusion, trading stock options can seem daunting at first, especially with the potential for loss of your deposit if the stock you have invested in goes down. However, the potential for gains if you've picked the right stock can be significant. It's important to remember that by understanding how to research and find the winners, you can remove that fear. That's why we're here, to provide you with the tools and knowledge necessary to navigate the world of options trading with confidence. In our next lesson, we'll take a deep dive into options chains, learning what they are, how to read them, and how to make informed decisions. By the time you finish this series on options trading, you'll be able to confidently tackle big words like options Greeks, delta, beta, theta, and more. We've got you covered.